Hello and welcome to Bforex.com special Friday edition. Today we're going to discuss the direction of interest rates and commodities. Robert, where do you think interest rates are going to go in the US compared to the Eurozone?
I think interest rates have a chance, a very strong chance of going up the end of this year or the beginning of next year. I think that this would be the right move by the Fed to battle the price of commodities. I think it's a misnomer by the Fed to think that they can hope for commodity prices to maintain themselves and to help the economy.
Robert, that means you completely disagree with Fed Chairman Bernanke. Fed Chairman Bernanke mentioned that if we see meeting minutes that commodities will stay moderate, oil prices are bound to go down, gold is about to go down, therefore they are expecting inflation to remain moderate. Okay, therefore really with growth improving at the moment, another interest rate hike could slow down growth again further in the US, could create a problem for the economy. My opinion, keep interest rates on hold at the moment and wait. Wait for the right time. Commodities are stable at the moment. Do not intervene in the market. The Fed has done enough recently. My opinion, let's wait.
I think that's a valid point, but I disagree for two reasons. One, the price of commodities cannot be contained by the dollar price right now. And also the fact that Europe and England appear to be going into recessions is going to lessen demand for United States goods, which will hurt the US economy. If the US puts their interest rate up by 1/4 of a point, it will stabilize the price of commodities for the next few months. Oil will definitely maintain or go down, I believe, and this would help the US economy long term. Oil prices also on the cheaper side would help the Europeans, and the economies would then in turn create greater demand for the States.
Look, from the Eurozone and the UK, they've been pretty much reactive. Now it's time to be proactive. The Fed, in my opinion, has been proactive enough. They've cut rates at the right moment. They dropped the interest rate down from 5.25% to 2%. In my opinion, in the last 12 months, they've been overactive. Not just proactive, but overactive. Now it's time maybe for them to sit back, maybe be a little bit reactive. We've seen the Eurozone and the UK economies that they've been too much reactive. Now it's their chance to be proactive. And their economies will suffer because of their problem of being proactive, so to speak, as you say. Another important point that you raised, this is what we have to discuss now, commodities. Where are commodities going to go? Robert, really, what do you think is going to happen with commodities at the moment? According to the US, we are hoping that commodities will drop, according to if they lay off an interest rate hike. But where do you think commodities are going to go?
I think this is part of the dilemma. I think commodity prices are directly affected by the price of the US dollar. If the US dollar is weak, commodity prices are higher. It becomes an inflationary hedge to a certain extent by buyers to just put the price up. And what we're going to see is the Fed come in, raise interest rates, I think, at the end of the year or beginning of next year in order to combat that. I think hoping that commodity prices stay where they are is the wrong ballgame. To affect the oil price and really bring it down, they have to have an interest rate hike.
Okay, look, what I have to say about that is we have seen that commodities have eased off tremendously. We have seen a correction over the last 2 days. Difficult to say where it's going to go. According to the Fed, we are seeing commodities should still ease off. However, we have to consider the real inflationary, the non-commodities based inflation. Commodities inflation is seasonal. It cannot be sustained inflation on the economy. So we'll have to see where that one goes. Again, our chief commodities analyst, Robert, will be monitoring commodities on a daily basis. So ladies and gentlemen, please keep a close eye on that one. Will affect interest rates in the US and the Eurozone. And more importantly, in the UK, we are expecting a rate cut soon. That's it for today. Thank you very much. We'll see you again next week.
Good luck trading everyone today.